Good afternoon, everyone. Welcome to our webinar, OptionsPlay, Trading Earnings with Limited Risk. Thank you all for registering and attending. My name is Scott Green, Marketing Director with Regal Securities. And today we'll be touching on topics such as what is trading earnings, strategies to limit your risk with OptionsPlay, options pricing around earnings, and more. For those who are new or unfamiliar with OptionsPlay, it's a cutting-edge tool to help you with your strategy and research for trading options, and it's now more highly integrated with your online trading platform. And so I'll be introducing our presenter, Tony Zhang from OptionsPlay, and he'll go over the tool with trading earnings strategies, and then we'll have some time for Q&A at the end. But first, I wanted to just say this disclaimer that the types of securities and forms and research tools used in this webinar are for demonstration purposes only and should not be considered a recommendation by Regal Securities or a solicitation or an offer to buy or sell any options. This webinar will be recorded and is not intended to be used for individual tax, legal, or investment planning advice. The recording for this webinar will be added to our website, and we'll notify you when that is ready. We'll also get the previous webinars recording on OptionsPlay up there as well. So we should have that up there soon, but we'll notify everyone once it's ready to go. So I want to present today's presenter, the OptionsPlay aficionado, Tony Zhang, who's the Chief Strategist at OptionsPlay. Tony has 12 years experience in financial services. He oversees the OptionsPlay developers, and that team has led to some of the most development of some of the most innovative tools in options trading and analysis. The current OptionsPlay tool is embedded with several major sell-side brokerage firms, as well as a direct-to-consumer platform. And Tony has helped take this from the ground up, building the product suite and bringing to market for both institutional and retail markets. And so before I let Tony take over, I just want to remind everybody where they can find OptionsPlay on their trading tool. So you have your tabs across the top here, and OptionsPlay should be one of them right there. So just click on that, and you can see screens such as this. And from there, I'll let Tony take it over. Tony?
Thank you, Scott, and thank you everyone for joining me this afternoon. My name is Tony Zhang. I am the Chief Strategist here at OptionsPlay. And let me just start by sharing my screen. Okay, if you guys can all see my screen, just type yes into the chat window. Just want to make sure everyone can see me. Great. So once again, today we're here to talk about how to trade earnings with limited risk, because right now we're right in the middle of earnings season. We still have about 2 weeks to go with some pretty big names still left to report their earnings. And it's an exciting time depending on what type of trader you are. This is where we see most of the volatility in individual stocks. This is when we see the biggest moves in stocks. For those of you that follow the markets over the last few days, we've had some pretty big names come out like Freeport Mac, Philip Morris. These types of names had big moves on earnings. So how do you capture some of this, and how do you do it with limited risk? And options is one of the ways that you can do that. And that's what we're going to talk about today. I do want to point out that trading earnings is risky. So one of the ways that we want to help reduce that risk or help you minimize that risk is using options. So we'll talk a little bit about what to look out for around earnings. I'll talk a little bit about what the previous quarter of earnings looked like, what our expectations for this quarter has been and what it will be going forward. And the most important piece that I want everyone to learn today is understanding what actually happens to option prices around earnings, specifically right before earnings, and what happens right after earnings, so that you can understand that and understand your risks before you place your trade. But the most important thing that we'll be able to cover here with you guys today is showing you how to utilize our platform OptionsPlay, which is free of charge to you as a customer of Regal Securities, how to use the tool to actually look at some options trades for the stocks that have earnings coming up, and understand what your risks are, what your potential rewards are, so that you can leverage these for your own portfolio. So today what I will do is I will go over, number one, I'll recap what happened last quarter. I'll talk a little bit about what our expectations this quarter is and how the results have been so far. I'll talk a little bit about the best and worst sectors of this quarter. I'll talk a little bit about the option Greeks, because it's really important to understand 3 option Greeks that will affect your options pricing around earnings. And then we'll end this talking about live examples. We'll show you some real stocks with some real earnings coming up, showing you some different strategies that you can take in order to play earnings that's coming up in the next couple of weeks. So we'll start with just talking about what our earnings preview is for Q2. We've already have about half of the S&P 500 stocks report their earnings, which is good because it provides us a little bit of guidance as to what we can expect for the next couple of weeks. Talking a little bit about last quarter, we had above average beats on earnings per share, which is bottom line, as well as sales, which is top line. We had some of the strongest sales beats over the last 5 years last quarter. And this is an interesting thing to look at, because since the financial crisis, for a long time, companies did not really grow in sales, but their earnings per share kept going higher. And that was really because of cost savings. So even though companies were not selling more products or new products, they were able to cut costs and still be able to drive share prices higher by doing that. However, over the last couple of years, we started to see companies really start recovering and start increasing their sales overall as an average. And that's really one of the main key themes that we've been seeing. And that's one of the things that we actually expect to continue going into this quarter. But the one thing that was very interesting, and it's still continuing to happen this quarter, and it's becoming more and more obvious, is that overcrowded stocks that miss tend to get hit the hardest, versus stocks that beat their earnings expectations didn't really gain much. Look at firms like Google. Look at firms like JPM. These are firms that beat their earnings estimates, but still did not actually move substantially higher. Some of them actually moved lower on that news. And that's one of the key things to look out for. So we're seeing a lot more stocks move lower because they miss, or they're just kind of meeting their guidance, versus stocks that are really taking off because they've really beat their expectations. So that's one of the key themes to focus on this particular quarter as well, because we're seeing that already from the stocks that have reported their earnings. So early forecasts showed strong growth, which we're still seeing some of that in this quarter. However, like I said, that hasn't necessarily contributed to actual gains in the stock price many times. The early reports in the macro for the quarter is still strong. It is one of the things that we're trying to focus on, because we did have a lot of volatility and a lot of rhetoric that kind of drove a lot of volatility in this market, everything from trade wars with China to North Korea. These were all things that just distracted us a little bit from the corporate earnings. And, earnings season kind of brought that back a little bit. But, we have seen some pretty big misses, and stocks really take a big fall after those misses. And that's been driving some of that weakness in the markets over the last week or so. But one key thing to continue to look out for the remaining of Q2 is the tax reform bill that was passed last year. We are now learning from the companies that are reporting as to what it is that they're doing with that money. Are they building? Are they buying? Are they investing? Or are they returning it to stockholders? And the key theme that we're seeing so far this quarter is share buybacks. Share buybacks has accelerated in 2018. It's been one of the largest contributing factors of the stock market rally in 2017, and it's another key theme that we're still seeing in 2018. 2018 is on pace to have higher share buybacks than 2017. So that is always going to provide a bit of a cushion on the market, especially stocks that have dropped substantially. Companies may be more likely to come in and buy their stock because they're trading at a cheaper multiple. So that is something that to be aware of as you continue to look at the earnings season this quarter. So talking about some of the best quarters and worst quarters for Q2, some of the stocks that had the highest upward revisions, which is the stocks that provide guidance, they were providing guidance that were higher and higher or higher than expectations. We saw that in consumer discretionary, financials, and energy. These are the three sectors that are holding up relatively well, I would say, in this fairly weak market that we're currently in. And then the sectors that are showing fairly weak sales and earnings per share are materials, real estate, and telecommunications. So it's been a mixed bag in those three sectors. We've seen some really big disappointments in the materials side, like Freeport McMoRan, firms like that, and some telecommunication stocks have been kind of mixed, if you will. So it's yet to see, and I have a couple of other ones to look at. I think AT&T just reported today. That's one to take a look at. So these are all the stocks that we've been these are the sectors that we're going to focus a little bit on today and take a look at. So let's move on to kind of talking about what to look for or what affects option prices around earnings. And these are the three most important concepts to understand if you're going to trade earnings using options, because this is where we see the changes in option prices around earnings. So number one is delta. This is telling you the change in the price of this option with respect to the change in the price of the stock. And this is most important because we get the largest movements of a stock 4 times a year because of earnings. So it's really important to understand, how does the price of the option get affected based on the price of the underlying stock. So delta is the measure of the option that tells us that. For those of you that have traded options before, you've probably seen or seen this delta before. So this is simply here for illustrative purposes. The reason I'm not going to get into the calculations of it and do any of that is because OptionsPlay will actually do the calculations for you. I just have this here at the bottom for an example for those of you that want to learn. So if you see an option with the delta of 0.5, that means that for every dollar that the stock moves, the option price will move by 50 cents or half of that. The second part we're going to look at is vega, because volatility is what changes a lot during earnings. So it's important to understand, how does the price of your option change with respect to the change in volatility? And that's what the measure vega tells you. Vega is also something that you typically may find on an option chain. So this is vega, where you can see, if you see an option, the vega of 0.25, that means the price of the option will shift by 25 cents for every 1% change in volatility. That's specifically referring to implied volatility of the option. And lastly, theta, the change in the price of option with respect to time. This is a constant regardless of what option strategy you're trading, whether you're trading earnings or not earnings. Theta is an option Greek that you should be aware of, and it simply tells you the change in the price of the option with respect to time. So if you see an option with a theta of 0.10, that means the option will lose roughly 10 cents for each day that goes on. So there's nothing we can do about the time factor because time continues to march on, but it's important to understand how much money, how much value that your option will lose for every day that goes on. And that's what theta tells you. So these are three very important concepts to understand, because price, volatility, and time are the three most important things that affect your option pricing around earnings. So let's take a look at, how do these things actually react around earnings? And again, I want to point out that this is here for illustrative purposes. You don't have to memorize delta, vega, theta. You don't have to know how to calculate it in your head manually, because OptionsPlay does all that work for you. And that's really one of the key things about OptionsPlay, is because we don't want you to have to deal with math or anything like that. We do that work for you. So let's talk about how do option prices change around earnings? And this is really why earnings is difficult to trade, because I call it one step forward, two steps back when you're trading earnings, because you have one thing working in your favor and two things constantly working against you. And the one thing that's working in your favor is a large stock move. When the stock moves a large amount, that is the thing that's working in your favor. So that's what we refer to delta. So if you think the stock's going to beat and you trade that and it does beat and it makes a huge move higher, or if you think it's going to miss and it makes a large move downwards, that's working in your favor, and that's what's going to provide you with profit. However, at the same time, when that happens, there's two other things in the background working against you. So there's a thing called a volatility crush. This is where the implied volatility option crushes or comes down right after the announcement, because the volatility or the uncertainty factor is gone. Because once the announcement comes out, we know exactly what the earnings numbers look like. That uncertainty factor is gone, so volatility will come down right after earnings. So that is working against you, because the price of the option will be reduced because the volatility will be reduced right after earnings. Lastly, time decay. Time is always marching on. It's always working against you. So you always have that factor working against you. So when you're trading earnings, you typically want to get in and out relatively quickly, because you don't want a lot of time decay eating away into the price of your option. So when you're trading options around earnings, you have one thing working again in your favor, the large stock move. At the same time, you have two things working against you, volatility and time. So that's why when you're trading options, when you're trading earnings with options, you have to not only pick the right direction, it actually also has to be a large move, a move large enough to overcome the losses that you have from volatility and time decay. So and what I mean by that is sometimes you can actually call the right direction, but if the move isn't large enough, then the losses that you have from volatility and time decay can actually be can offset the gains that you have from delta by even more than what you gain on the delta. So you can actually still lose money on the trade even if you call the right direction and the move simply isn't large enough. So we'll talk a few examples about that, and I'll show you some real examples using the stocks that we'll look at as to how big does the move need to be in order for the option to be profitable. And that's a really important question that a lot of people have is, well, how do I know how large of a move needs to happen? And that's exactly what OptionsPlay will be able to tell you. So lastly, if you call the wrong direction, doesn't matter whether it's a big move or a small move, you'll likely lose money trading options. So we'll talk a little bit about that, but basically if you call the wrong direction, you're going to lose money no matter what. There's not much you can do about that. So let's talk about some trading strategies. So we've talked about how option strategies are affected around earnings. Now let's talk about what can you actually do if you think the stock's going to beat on earnings or if you think it's going to miss on earnings. So I'm going to talk about two different strategies. I'm going to talk about one simple strategy, which is buying a call or a put. Okay. Then we'll talk about buying a call or a put vertical. So the first strategy, which is the simple strategy, for those of you that are starting out with options, you want to stick to a simpler strategy. This provides unlimited profit potential. Buying a call, if you're bullish, meaning if you think the stock's going to beat on earnings, you should buy a call. If you think the stock's going to miss on earnings, you should consider buying a put. This gives you unlimited profit potential, and you use it when you expect a big move in one direction or another. So if you think the stock's going to miss on earnings, you think the stock's going to beat earnings by quite a bit, you would want to typically buy a call or a put. This typically strategy does require a slightly larger amount at risk, and I'll show you some examples of this using OptionsPlay with some of the stocks that are reporting earnings in the next couple of weeks. For those of you that have a bit more experience trading options and have traded verticals, this is another strategy you can consider looking at if you're bullish or bearish on a stock. So you would trade a call vertical if you think the stock's going to beat. You would trade a put vertical if you think the stock's going to miss. Now, this strategy provides you with limited profit potential, unlike the call or a put that gives you unlimited profit potential. However, this gives you, you can use this strategy if you expect a modest or a slower move. So if you don't think the stock's going to make a huge beat or a huge miss, you can use these put verticals because you can use them if you only expect a smaller move, and you can use them because it requires a smaller amount of money at risk. So I'll actually show both strategies side by side so that you can actually see which one's best suited for each given stock that you're looking at. And that's really the most important thing, because the most common question I get is, how do I know what strategy I should trade? I don't know if I should buy a call or a vertical. So we'll show you the two side by side so you can actually compare them. Lastly, when you're trading options around earnings, you should usually pick an expiration that's at least 2 to 3 weeks after the earnings date. And the reason for this is because a lot of times the stock might beat on earnings or miss on earnings, and the move materializes over a couple of weeks. It might make one quick move immediately after earnings, but then after the next 2 to 3 weeks, it might still continue going in that direction. So you want to give yourself a little bit of time. You don't want to trade the expiration right after earnings, or a few days after earnings, because a lot of times that move happens after earnings for the next week or two. You want to give yourself that room, that buffer, so that if the stock does go in your favor and continues to go in that favor, you can continue to profit from that. So you generally want to pick expirations that are at least 2 to 3 weeks beyond the earnings date that you're looking at. So now that we went through those quick slides, what I really want to do is spend the time showing you actual examples of trading strategies using OptionsPlay. So as Scott was saying before, for those of you that are new to OptionsPlay, welcome. You can find your OptionsPlay. It's a tab here on the upper right-hand corner. You can also add it by clicking on the OptionsPlay widget from the Add Widget tab if you don't have it. And this is a brand new platform that's available to you to make options trading a little easier. And the reason we created this was because, this is a chains page. This is where you're typically starting when you're trading options. And there's a lot of numbers on here. There's a lot of expirations. There's a lot of strike prices. And some of the problems with this screen is that it doesn't allow you to compare buying a call to a call spread, or comparing one expiration to the next expiration. And it's really difficult to calculate what your expected profit and loss is if you're decided to trade the 49 strike versus the 50 strike. How do you make that comparison? So this is really why we created OptionsPlay, was because you couldn't do all of that analysis from looking at an option chain. We wanted to provide a brand new way to visualize options and compare different strategies side by side, so you can definitively say which strategy is best suited for you. So the platform, when you log in, is divided into 3 sections. You have trade ideas and watch list here on the left. We have our security analysis panel here in the middle, and then we have trading and income here on the right. So trade ideas and watch list provides ideas every day for bullish and bearish ideas that you can sort and filter by. Watch lists, you can create your own watch lists so that you can keep tabs on the stocks that you want to look at. Our security analysis panel, which I'll go over in a little bit, is designed to give you snapshot data so you can quickly decipher whether a stock is likely to be in a bullish or bearish phase. We'll do a separate webinar specifically on that alone. And then trading and income here on the right is designed to help you visualize option strategies, create different scenarios so that you can see which strategy is best suited for your given outlook on the stock or ETF. So that's really what I'll spend my time here talking about today, is the trading tab. But for those of you that like to sell options for income, like covered calls or short put, you want to take a look at the income tab, because it provides ideas for covered calls and short puts, as opposed to having to pull up that chain every single time. It automates that process for you. Our next webinar is actually going to be specifically on generating income using options. So we'll give you that schedule next once we're done here. So let's talk about a few stocks that are reporting earnings here. And I just pulled a few random stocks. Again, this is not by any means a solicitation to trade any of these stocks. I don't have an opinion on these stocks. These are just stocks that simply have earnings coming up. I'm going to go through a few of these as an examples to show you how you can use our tool to find strategies that make sense for you if you have a view on these stocks. So here's Lowell's. Number one, what we do is we have the earnings date here right below the chart for you, so that you don't have to go to an external source to necessarily find that next earnings date. So for any stock or ETF you type in, or I'm sorry, for any stock you type in, you'll get the earnings date right here on the bottom simply by typing in the stock. And what we do here on the right is we always present 3 strategies as a starting point for you. You can modify these strategies, but this is a good starting point for most people who have either a bullish or bearish view on any underlying stock. So here's Lowe's. It's trading at 51.54. And what it does, it provides me with 3 strategies. I can buy the stock, I can buy a call, or I can buy this call vertical. So these 2 strategies here on the right are the 2 that I was referring to. If you're brand new, you want to stick to a simple strategy like buying a call. If you're a bit more advanced, you might want to take a look at this call vertical. And what we want to do is provide you with this tool so you can compare the 2 side by side and see which one's best suited for you. So buying the call costs $245. That's how much you're risking. Buying this vertical costs you $225. So you're risking $20 less when you're trading this vertical. So let's take a look at how this will perform around earnings. So this is where we're going to turn to our P&L simulator. And you can use this for all types of trading. It doesn't matter whether you're trading earnings or not. Even if there wasn't earnings, you can still use the P&L simulator to give you an idea as far as which strategy should I trade. Because that was one of the things that as a trader myself, I could not figure out from the chain. Should I buy a call or should I buy a call spread? You can't do that type of analysis, but it's really important because sometimes depending on how bullish you are, one strategy is better than the other. So let's take a look at this trade. So Lowe's is trading at 51.54. Let's say I think this stock's going to beat on earnings and it's going to go back up to this 52-week high, which is around 54 levels. So what I can do is I can use my tool, my P&L simulator. I can say what happens if Lowe's goes up to $54. And we know that the stock reports earnings on April 30th. So let's say I think it's going to go up to 54 a few days after earnings. So April 30th, a couple of weeks after that, let's say the middle of the following week on May 9th, I think the stock's going to go up to $54. And we talked about volatility comes down after earnings. So we can model that and say what happens if volatility comes down a little after earnings. So here I've created the scenario, stock pops up higher on earnings, a week and a half after earnings, and volatility comes down. As you can see, I have 2 strategies. I have buy the call and I buy this call vertical. The call gives me roughly a 70% return if this happens. So it cost me $245. I get a $169 profit. That's a 69% return. If I bought this call vertical, it cost me $225, which is a little less than buying a call, but I only make a $123 profit, so only a 55% return. So this allows me to say, if I think Lowe's is going to beat on earnings, and I think realistically it can go back up to this 52-week high, then I'm going to realize roughly a 70% return on the call versus the call spread. So I might look at that call if I decided that I think I'm bullish on this stock. But you can also use this tool to help you decide exactly at what point does the stock need to move in order for these strategies to even be profitable. So as you can see here, as the stock moves up to about 52.5, so even if the stock moves mildly higher to 52.5, which is just around this last high, these last 2 highs here, around 52.5. Even if it goes back up to that level, these 2 strategies basically break even. So if I think it's going to exceed that or higher, then I'm going to make a profitable trade on these 2 strategies. And you can also continue to drag this to see at what point does one strategy start to outperform the other. And it doesn't look like that's the case. So no matter what, if the stock makes a pop higher on earnings, I should probably consider trading this call because it always gives me this higher return versus the call vertical. So this allows me to definitively say that if I'm bullish on Lowe's going into earnings, I'm probably better off trading this call than this call vertical, even if it has slightly more risk. This is exactly why we built this tool, so that you can confidently say, I think it's better to trade a call versus a call vertical or any other strategy. You can use this tool. You can modify this. If you want to trade a different strike price, you can trade a different strike price. You can trade a different expiration date. So if, let's say, you want to compare trading the May expiration versus trading the June expirations, we can do all of that analysis. So we can even say, what happens if we only trade the May expirations? I think the stock's going to go to 53 a few days after earnings. And we know, again, volatility is going to come down. What are my expected returns? So if I trade the May expirations here, I only get a 41% return. So it sounds like I might be better off trading that June expiration. So this allows you to put these strategies side by side and actually definitively say which strategy is best suited for me, as opposed to on the option chain, it's more of a guess, maybe an educated guess, but it's still always a guess. So use the OptionsPlay tool to help you find strategies and use the P&L simulator so you can definitively say which strategy is best suited for you. And the best part about the tool that we built here is that, especially if you're trading a lot of options, you will find that trading, entering orders sometimes is a bit of a tedious process, especially when you're trading these multi-leg trades. So when you hit the trade button, you have a button here that says preview order, and that will pre-fill the ticket for you. So you don't have to fill any more tickets anymore. You don't have to use the option chain to constantly click on these little buy and sell buttons, and sometimes you click on the wrong one, or if you want to shift one, then you got to do a lot of clicks to shift them. So what we do is we make this a lot easier for you so that you can just simply use the OptionsPlay tool. If you want to change all the strikes up one, you can just click one button and it'll move all the strikes up one. If you can click on the left one, it'll just move all the strikes down one. You can just do all of that with the click of a mouse, and once you're ready to trade, you just hit the preview order button and that will populate the ticket for you. So this is designed not only to help you confidently know which trades to make, but also make your order entry and finding those trades much, much easier. So let's move on to a couple of other examples. I want to go through a few other examples here. Electronic Arts, a tech stock that's in the gaming space. As you can see, this stock reports earnings on May 8th. Again, I don't have any particular views on this stock. This is simply just for illustrative purposes. This stock's trading at 116 right now. Tech has certainly been a bit of a sector that has not been doing very well this particular earnings season. So let's take a look at what happens if EA is bearish going into earnings, or what if it misses on earnings. And let's take a look at this chart here a little bit. Let's zoom out. As you can see, it's kind of had this topping formation. It's recently kind of broke below this major support level, and now it's trading below that. And there's a lot of room for this stock to potentially go to the downside. So it's not that crazy for me to say this thing could go down to 109, maybe even 101. 100, certainly where that December low is around 100. So there's a lot of potential downside here. So what happens if we think Electronic Arts is going to miss on earnings? So first of all, this platform provides you with starting points. So instead of having to pull up that option chain, type in EA, then having to select an expiration date, then having to select the strike price, it does all of that for you as a starting point. And it will always pick an expiration that's roughly 45 days out, because most people will trade options when they're speculating about 1 to 2 months out. You can always make the adjustments if you want to trade a longer dated or shorter dated option, but 1.5 months out is usually a good starting point for most people. So as you can see here, if I bought this June 15th 120 put, it cost me $775. This is the simple option strategy that you can take if you're bearish on a stock. And even if you're not trading earnings, you can still use this tool specifically to help you find what strategies to trade, versus this put vertical here, which cost me $673. So I'm saving roughly almost $100 here from trading the put versus the put vertical. So let's take a look at what happens. Okay, so Electronic Arts, like I said, is trading at 116 right now. Let's say I think it's going to go down to 109. Conservatively, I think it's going to go down to 109. Reports earning on the 8th. So let's say a week and a half after, on the 17th. And we talked about this, volatility comes down after earnings. So what happens? If EA misses on earnings, comes down to 109, which is roughly around right here on the chart, right around here, this little gap that was here back in November. As you can see, if I bought this put, which cost me more, I'm actually going to only make a $339 profit, a 43% return, versus if I bought this put vertical, which not only cost me $100 less, but I'm going to make actually more profit, a $400 profit, which is a 60% return. So here, in this particular case on Electronic Arts, if I'm bearish and I'm looking at these two strategies, I would probably prefer trading that put vertical, because it'll give me the higher profit potential, a higher return, and it costs me less, which means I'm risking less money on this specific trade. And you can put in all different types of scenarios. What happens if you think the stock's going to go down to 100? So we talked about what happens if this stock really takes off and goes down to that December low, which is right around $100. As you can see here, that's when this put starts to outperform. I'm going to make a $1,200 profit, which is a 155% return. And here I'm only going to make 152% return. So here I would actually still probably trade this vertical because I'm getting roughly the same return for $100 less risk per contract. So I would certainly always take that. And that's really why we get the higher options play score. A lot of people ask us that. What is the options play score? It's really taking into consideration what are your potential risks, which is, you know, if EA was to beat on earnings and actually takes off, let's say it goes back up to this 126, 130 level. If it goes up to 130, as you can see, I lose pretty much all of my investments, which is here is about $717. Here is $615. So even if I'm wrong, I'm risking less money. I'm risking $100 less by trading this vertical versus this put. And if I'm right, I actually make a higher return. That's why we have a higher options play score on the put vertical versus just the put. And if I'm ready to place this trade, I can click on the trade button. And for those of you that are brand new to trading, I highly recommend you to take a look at our strategy checklist. This is designed so that you understand your risks before you place a trade. So we check to see if you're trading with the trend of the stock. Are you trading with the trend of the market? How's the options play score? In this particular case, all of these three things are green, meaning it's good. It's telling you that there's an earnings between now and expiration. This is a warning sign. So especially if you're trading an option, you didn't know there was an earnings coming up, this would warn you so that you know ahead of time and maybe adjust that volatility to see, you know, how does that affect this option pricing around earnings? And lastly, we look at the spread and liquidity. We look at the bid-ask spread to determine how liquid is this option. So as you can see, this is trading at 590 by 672, which is a decent sized spread. So we want to make sure you understand that this is a fairly wide spread and know that risk before you place a trade. But once you're ready for that, you hit the preview order button, pre-fills the ticket for you so that you can go ahead and just put in your market order or limit order, however you want, and place that trade. This is designed so that you can quickly analyze a trade without being boggled down by the option chains. You can quickly see it visually, very clearly what your total risk is. You can even click on it and see what your max reward, max risk, all of that's relevant information if you want, but also in summary data through the options play score. So I highly recommend you to use the P&L simulator that helps you understand each one of these strategies before you place that trade. I'm going to go through one last one before I open this up for Q&A, CenturyLink. And again, this is just for illustrative purposes. So, you know, the 1 month and 6 month trend is bullish. This stock is trading near its relative highs over the last few months. So let's say you're bullish, you know, here are 3 bullish strategies, but let's take a contrarian trade on this, right? So let's say for argument's sake, you're bearish on CenturyLink. And again, I'm not bearish on CenturyLink. This is not a solicitation to short CenturyLink, but I'm just saying for illustrative purposes, if you are bearish on CenturyLink, you can click on the I'm bearish button. And what that does is it now sets up 3 bearish strategies on CenturyLink. So now you can buy a put, which costs you $156, or you can buy this put spread, which is $130. So roughly $26 in savings. You know, here you get a very low options play score. What that's telling you is that you have a lot of potential risk on this trade, meaning and very little potential reward. But let's take a look at this, right? It's trading at roughly $18 right now. What if we think it's going to drop down to this 15 level because it's going to miss on earnings, right? And this reports earnings on May 9th. So what happens on May 9th? We can take a few days after May 9th. So let's take May 16th or May 17th, a week after earnings. We think the stock's going to go down to, let's say, $16. And we know volatility is going to come down after earnings. So let's say all of those things happen. Here, if I bought this put, I make 100% return. If the stock goes down to $16 by a week after earnings, and I make a 98% return if I bought this put vertical. So slightly higher, almost identical returns for each one. So the stock really needs to move quite a bit for this put to be worth my while. But what if it doesn't do that? What if it only goes up to $17? Here, I make a 38% return on the put and a 52% return on the put vertical. So this allows you, again, no matter what scenario you have in your head, whether you're bullish or bearish. So if you're bullish on CenturyLink instead and you think the stock's going to take off and you think it's going to go up to $20, you can do that very quickly. Say, I think it's going to go up to $20 by May 17th or 18th, and volatility comes down. Here's my expected returns. If I bought this call, I make a 63% return. If I bought this spread, I make a 56% return. So I'm probably going to trade this call instead. So if you hit the trade button, you can take a look at the strategy checklist if you'd like. And then if you're comfortable with the risk that you're about to take, click on the preview order and it pre-fills the ticket for you so that you can start trading these strategies immediately. So with that, I just want to wrap up what we referred to. Really important to understand when you're trading options around earnings, there's three things that's most important: delta, which is the change in the price of the stock; vega, which is the change in price and volatility; and theta, which is the change in time. There's nothing you can do about that. So always remember that volatility crush and time decay is always working against you. Factor that in when you're thinking about how option prices will change around earnings. And once you have that, you just go into OptionsPlay. You can use our P&L simulator and quickly look at some strategies for the next 2 weeks as we complete earnings season going into that. So with that, what I'll do is I'll open this up for Q&A. And I will try to answer as many questions from the chat room as possible. So please, if you have any questions, please type them into the chat window. I'll answer the ones in the Q&A window, but the chat window is a little easier sometimes for me to manage. Pat's asking, I don't have a trader income tab on the right-hand side of my screen. So maybe you might see it like this. So if you're seeing your screen like this and you don't see that trading and income tab, click on the show trade panel here right above your historical chart, and that will bring the trading and income tab. I hope that answers that question. Jeff, if you have a paper trading account, please call the support desk at Regal. They should be able to help you with turning that on. What does the number 5 mean next to the earnings date? That just tells you the number of days until the next until the earnings. So here, May 9th, 14, that just tells you there's 14 days until earnings. I have a question here. Can you view open interest and volume from OptionsPlay? You cannot, and that's specifically the reason for that is because we don't think open interest and volume is a good way to gauge liquidity. We think the spread between the bid and the ask price is a much better way. So you can click on the trade button, you can see the spread, and if you don't know how to analyze that yourself, you can always click on the strategy checklist and we'll tell you the bid-ask spread is either wide, narrow, and that's a much better way to gauge liquidity than using open interest and volume. Let's see. I have a question here saying the OptionsPlay tab does not show any details or the Windows presenter is showing. Please contact customer support. They'll be able to help you with that. But if you click on the OptionsPlay tab, you should see exactly what you see on my screen right now. Steve, there's a question about the OptionsPlay score. I hope I answered that during this webinar. Basically, the OptionsPlay score tells you how much potential reward there is on each strategy versus how much potential risk, which is the green versus the red, and it tells you how well balanced that is. And that's really what the OptionsPlay score tells you. The check mark just simply tells you it's the highest scoring strategy of the three. How do we find Greeks for a specific stock? Well, Greeks are specific to the option, not the stock. So you can always click on the expand button on a specific option, and we actually explain the Greeks to you in plain English. So it'll actually tell you the delta, theta, vega, and gamma, and explain delta and theta to you in plain English. Especially for those of you that are brand new to options and find the Greeks a little intimidating, we try to break this down into plain English for you so that you don't find it as intimidating, if you will. Teresa's asking, where do we gather info to be able to speculate a close percentage of the volatility? That's a great question, and there isn't always a good resource for that because that changes all the time. And just looking at what happened last earnings season does not necessarily tell you what's going to happen going forward. So sometimes looking at expirations that don't have earnings is a good way to tell because that will tell you what the market is implying without earnings. So for example, if you have an earnings coming up in 3 weeks, look at an option that expires in 2 weeks and what the volatility of that is trading at. And that may be a good guidance for what volatility will look like after earnings. Sorry, I'm trying to get through as many questions as I can. There's a lot of questions here. I have problems opening OptionsPlay in Chrome. I'm using Chrome right now, and it seems to be working fine. Chrome is usually the standard that we go by. If you have more problems with that, please contact customer support. They'll be able to help you. Bill's asking, how do we sell a stop loss? That's a question for Regal Securities, so please contact your broker for that. Is this tool available on Android app? No, this is a tool that's only available to you through your web-based platform at Regal Securities. Let's see. Let me get to some of the other questions here. How about a seller of volatility? Interesting question. So one of the things that you can do if, let's say, you are a seller. So for example, for those of you that like to sell credit spreads, let's take a look at what was it, EA. Let's say you're bearish on EA going into earnings. You can sell credit spreads. So you can click on modify for any strategy. And this is something that I didn't go over here today because we'll do a separate webinar on this, but you can click on the strategy constructor and you can construct all types of strategies. So you can sell a short call vertical. So if you want to sell a credit spread, and you can also model that going into earnings, saying what happens if the stock drops to 109 a few days after earnings, and the volatility drops. You can see, hey, if you sold this credit spread now, you'd make a 76% return. Nice trade to make. So you can use these tools. You can use our tool for all types of strategies. You just click on the modify button, use the strategy constructor, and you can construct all types of strategies from our strategy constructor. Great question. I have a question here. How do you do a limit order on a vertical? So you can click on the trade button, hit preview order, and you'll see this here where it says order type. You can click on limit, put in the price that you want. So this is trading at 616 by 681. So you can put in any price between those two prices and hit, let's say you want to pay 635. You can click on verify, and that will allow you to place a limit order on a spread. How do we find the Greeks? Again, click on the expand button on the P&L chart, right little this magnifying glass, and at the very bottom it'll say explain strategy and Greeks, so that you can see the Greeks right here. This webinar is recorded, so there's a lot of things that we're going through right now, so please, you can watch the recording for all of these things if I've gone through them a little too quickly, but I'm trying to answer as many questions as possible. Is there a PDF or tutorial on this info? So all of our webinars are recorded, so we do these webinars specifically to show you guys in action how to use this tool. So the last webinar we just did, which was a general webinar on showing you guys the OptionsPlay tool, that's the best one to use to get a better understanding of how to use our tool. And now all the ones we're doing forward is on specific trading strategies. Today we're doing earnings because it's right in the middle of earnings season. Next week we're going to come back, we're going to be doing, or the next time we're coming back, we're going to be doing income strategies. So we'll be trying to cover as many of these, as many different trading strategies as we can. We can only do one for each webinar. Mark is asking, is there, for example, only looking for short put? Absolutely. So on the income tab, you can click on short puts. So if you created a watch list with all the stocks that you want to short puts on, you can click on the income tab, And for any stock that you type in, we will give you the short put idea. We will give you both the cover call and the short put idea. Is this software help for sellers of volatility? Well, I just gave that example here where you can use this for all types of strategies. So if you want to sell volatility, you want to do a short call vertical instead of a long put vertical, you can do that with the click of a mouse right here, just under your strategy constructor. You click on modify, and then you can select any strategy you want. So if you want to sell volatility, you can certainly do so. Can you explain what a vertical trade is? So one of the things that we do here is what's called a plain English tab, especially for those of you that are brand new. I don't have enough time to quite get into the intricacies of how to construct a vertical trade, but we have a plain English tab that helps you better understand what each trade is. I highly recommend you to use that so that you can learn more about each one of these strategies. Can you download webinars? No, but all of our webinars are recorded so that you can view them at any time. We will send you an email with a link to all the recordings right after this webinar. How long do you typically hold on to an options play? Well, that depends. So with these earnings plays, you generally want to get out relatively quickly once the move happens, because again, time value is always working against you. So if you're buying an option, you want to get out as soon as the move happens, because you don't want to continue holding on to it, or else time value will continue to erode. So it's really based on your views on the underlying stock. If you think the underlying stock's still going to continue going in your direction, then you can hang on to it. But if you feel that the move has already happened, get out immediately, because you don't want time value to continue working against you. I have another question here. Do you consider intrinsic value and time value in these three strategies? Absolutely. So that's how exactly why we use the time slider, because your intrinsic versus extrinsic value changes as you go along in time. And that's exactly what we're calculating. So even if everything stays constant, as you can see, the P&L changes as time goes on, because the extrinsic value of your option will erode as time goes on. For bearish trade idea, which score is better, 1 or 10? So on the technical score here, on a score of 1 to 10, 10 are the strongest stocks in the market, 1 are the weakest stocks in the market. So if you're looking for bearish trade ideas, you generally want to stick to stocks with a weak technical score. So 1s, 2s, 3s, and 4s, those are the types of stocks that you're looking for if you have a bearish view. Mike is asking, how long is this going to be available on eOption? I'm not sure what you mean by that. How long is what going to be available? If you could clarify, that'd be great. Can I listen to a previous webinar? Absolutely. So I'll make sure that the marketing team sends everyone the recording so that you can see the first recording for those of you that have missed it. How do you shrink your screen to see all in one view? I'm not sure what you mean by that. Everything is already on my screen in one view. Is there a way to save an order and recall it? That unfortunately is a question for Regal Securities. Please contact their customer support. They'll be able to help you out with that. Are there any other questions regarding options play? If you can't find the options play tab, you might be able to see it under add widget options play. If you don't see it there, then I highly recommend you to call the options desk, or I'm sorry, the customer support. They'll be able to help you with that. There's a question here. Is there a way to only look at stocks with weekly options? There isn't a way to only look at stocks with weekly options, but right now there's quite a few stocks that have weekly options. Most stocks that you can see that you would probably want to trade anyway have weekly options listed on it. But unfortunately, we don't have a way to only look at stocks with weekly options. Mike, they just signed the contract, so you have at least probably close to 2 years. Joseph, thank you very much. I hope you guys find this platform useful in helping you guys analyze your options trades. We built this because when we were traders and we were looking at these types of screens, it wasn't enough information to help us decide exactly which strikes were best. We were using these different types of analytical tools to help us calculate P&L and returns, but we were doing them manually every single time. And so we would pick one expiration and strike price, do some calculations, decide that it's not quite for us, and we'll come back to the chains. And we decided that there was so much back and forth that we were doing that we just wanted to build a tool that allow us to do multiple strategies side by side and instantly calculate for us what is the potential reward and risks and provide us guidance for that. And that's really why we created this platform. And I hope you guys find this useful with your trading, because I know that as a trader myself, I experience a lot of these pain points, and I'm sure that many of you guys do, trying to figure out which expiration or strike price to trade. We wanted to put all of that for you guys on one screen so that you guys can see them all. So I'm really happy to hear some of you have been using this tool and finding it helpful. If you have any feedback, please send them to us. We're really happy to listen to them and try to improve our platform based on the feedback that you guys provide. Paul, thank you very much. Victoria, thank you so much. I really appreciate it.
Tony, do you think that's about all the Q&A that we have?
Yeah, I think we can wrap up here. There's still a few more, but please, if you guys have more questions, please send them to the customer support team. They can always forward them to us. I'm unfortunately running out of time here, so again, I want to thank everyone for taking the time out this afternoon. I hope you guys have found this tool useful. We'll be back next week or next time in a couple of weeks to talk about generating income. I know that's a very, very popular strategy amongst options traders, is how do you use options to generate income using covered calls, cash secured puts. So that's the next topic. Please register for that, because that's going to be really helpful for those of you that like to sell volatility. That was a lot of questions that I got here today.
Yeah, thank you, Tony, for giving us that overview on trading earnings and showing us the different strategies and analysis used on the OptionsPlay tool. It was a great overview, a lot of great questions. So thanks for taking the time to go through all the attendees' questions as well. So just a reminder, you can find the OptionsPlay tool on the tab on your trading platform. And that go ahead and try it today. If you have any more questions, please reach out to your broker's customer support team, and we'll address you and your questions. And as Tony mentioned, we have another webinar coming up in 2 weeks, Wednesday, May 9th, same time, 3:15 Central Standard Time. It'll be different call in and log in information, so we'll be sure to register. We will be sending out information. If you received obviously this invite, you'll be receiving one for the next one. We will also be sharing information about the recording of this event. It'll be going on our website, and you'll be sent an email about it real soon. And thanks again. And as Tony mentioned, if you have any feedback, please let us know. It helps us continue to develop our platform and tools. So we encourage any kind of feedback. So thanks again. Thank you for attending and joining our webinar. And we'll be in touch. Be on the lookout for the next webinar invite and information about the recording. Thank you very much. Bye-bye.